welcome to another episode of Blue Alpine TV. Folks, it looks like we have survived the worst. Or didn't we? If we look at the markets today, it looks like most coins have actually recovered from the crisis of Bloody Tuesday and Bloody Wednesday and are up in the green again. Bitcoin, Ethereum are almost up 20%, Ripple and Stellar are almost up 50%, and some coins are even up in the 60% range. So it looks like it's going up again. Now, I wouldn't be so sure about the markets going up fully yet. There is a theory that I'd like to talk about at the end of this video. But first, let's jump right into the first news story, South Korea again. Folks, it looks like the stories won't end from South Korea. So there is definitely some action happening there. South Korea is still, there are still rumors that South Korea might ban cryptocurrency trading. This whole thing started around January 11th, where South Korea came out and said that they are discussing potentially shutting down all the cryptocurrency exchanges. Now, today there is an article basically saying we have started looking at virtual currency from a long-term standpoint, as central banks could start issuing digital currencies in the future. This sort of research was begun at the Bank of International Settlements, and we are part of that research. It basically means we are taking cryptocurrency seriously. We might even build something on top of cryptocurrency, but while we don't know what is happening, there is a risk of the Wild West going on, and we need to control this somehow. So South Korea is basically trying to control this beast called cryptocurrency, but there are also other rumors from FTC Chairman Kim Sang-joo, and the FTC is the Fair Trade Commission of Korea, and he basically says, well, there is no ground of banning all the exchanges in South Korea. It is not realistically possible to shut down cryptocurrency exchanges, adding that the law does not permit the authorities like the Justice Ministry to close cryptocurrency exchanges. This is really good news. I mean, obviously from a state side, this is by law, probably they can't do it, but maybe they can. If they want to really protect the people and bring in some regulation, this is always a possibility. Also, laws can be changed with time. But he's continuing and saying shutting down cryptocurrency exchange is not realistically possible based on electronic commerce law. The government does not have the authority to close down cryptocurrency trading platforms. On one side, they want to control it. On the other side, they definitely see that there is a lot of economic gain to be gained or win from cryptocurrency trading, so they won't really risk it. Then, as you might remember, yesterday we've had this news story of the South Korean people actually gathering more than 200,000 signatures to get the state to give out an official response on why they would want to do something like this. Basically, the people of South Korea are demanding that even if there is some kind of regulation, it should be more of a balance versus purely regulating and purely banning everything. The FTC chairman is actually continuing here. From the viewpoint of an economist, it is not fair and transparent decision to outright ban economic activity. Whether it is excessive speculation or not, the gain or the loss is the responsibility of the investor. A ban, if needed, would extend only to crypto exchanges and trading platforms violating the rules. So there are two big rules here at play. That also are really important in South Korea. One is the anti-money laundering law, which is the AMY law, and the other is basically the KYC laws, the Know Your Customer law. So exchanges are required by law, and this is not only in South Korea, but South Korea is really strict with this, especially because the price arbitrage possibilities in cryptocurrency has been huge. The prices generally in South Korea and in the Asian markets are most of the time a bit higher than in the European and US markets, allowing people who want to try arbitraging selling and buying a cryptocurrency at a discount or at a premium. Now, through the anti-money laundering laws, this is actually not really possible. If I remember correctly, the law states that any amount above 10,000 US dollars has to be has to have some kind of declaration behind it. So even the exchanges are not allowed to send out the money when people try to exchange it into fiat. I think this will also apply to cryptocurrency, and this is basically the main reason and the main discussion in South Korea right now. So the anti-money laundering law and the know your customer law. So they want to know who is trading on their exchanges, so that a certain kind of transparency comes onto the exchanges. As we've said in the previous episodes, we think that some kind of regulation is necessary and it's important. If South Korea will make that first step, yes, short term it might hurt the market, but long term it will definitely help grow the market even further and stronger. So I think the result out of this discussion from South Korea should be quite positive in the end. Another story is there was some insider trading happening in South Korea as well. So a person working for the government and actually being part of that task force in the policy coordination office, an FSS employee, which is the South Korean Financial Supervisory Service, is accused of doing insider trading. Obviously, if you're part of the state and you are part of these discussions, you kind of can anticipate what will happen on the markets, so you can place your bets accordingly. So this is a story where one person has purchased cryptocurrencies worth 13 million won, which is 12,220 US dollars on July 3rd of 2017, and on December 11th, 2017, he actually sold the crypto assets for around 20 million won, which means that he got nearly 7 million won as profits. Now, this is not a lot, but still it is a profit, and by law you are not allowed to do trading like this, especially if you're part of a big commission, an important commission in an important decision-making time like this. So this will definitely bring some kind of penalty with it. It is not clear yet what kind and how severe, but we will keep you posted on this. Now, moving on to the next story, Bitcoin futures. The title says first Bitcoin futures contract expires at 10,900 US dollars, a win for the bears. As you know, bears is a downtrend market and bulls is an upgoing market. And when the futures from CBOE and CME have been introduced, a lot of people have actually speculated that the big institutional money from Wall Street will come into cryptocurrency space and actually shock it in some kind of way, because they are betting heavily on a certain downtrend. If we look at the numbers, it seems like they have made the right bets. So a lot of people, there is a number, I think 1,907 people have bought short position contracts for Bitcoin futures on CBOE. The CBOE contracts actually closed yesterday evening, and right after it closed, the market jumped back up. So there might definitely be some correlation with the price decline and the price incline. Maybe there is market manipulation. If there is, we don't know about it. We will probably never find out. But as we've said in the previous episodes, we believe in the fundamentals of certain cryptocurrency coins that you can read on the papers on our page. And if you believe on the fundamentals of the coins, they will win regardless of short-term volatility and short-term crises like we've experienced in the past couple of days. I want to quickly jump into how Bitcoin futures actually work, because this is quite important. Next week on the 26th of January, CME's first Bitcoin contracts will expire. So there is actually a risk that the market will tank again and jump back into the red zone. So in order to really prepare for it, I have prepared here a quick presentation. So we can start right here. So how Bitcoin futures work. So what is exactly a futures contract? A futures contract is the agreement to buy or sell an asset. This could be, in this case, Bitcoin or wheat. It could be cacao, coffee, any kind of resource. It could be gold, diamond, in the future for a set price. So what exactly does that mean for the seller? What does it mean for the buyer? The profit for the seller is actually the initial futures price minus the ultimate market price, and the profit to the buyer is the ultimate market price minus the initial futures price. Now, how exactly does this look? And let's jump into an example. An example for shorting. So what exactly happened with CBOE futures was, let's say the Bitcoin price is around 15,000 US dollars. This is just for example's sake. If the Bitcoin price goes to 16,000 US dollars, the $1,000, like the person who is shorting the Bitcoin futures contract, has a potential loss of 1,000 US dollars. How is that calculated? If I have to buy for 16,000 US dollars, I have to sell for 15,000. I am losing 1,000 US dollars in between. Now, if I am shorting, that means if I'm betting on the price getting lower and the price actually gets low, so from, let's say, from 15,000 up down to 14,000, I have the potential of 1,000 US dollar win. So I'm buying for 14,000 and I can sell it for 15,000. And this is exactly what happened with the CBOE futures. So the Bitcoin price started with around 16,500 US dollars and it ended at around 10,500 US dollars. So yesterday evening, European time, it was around 10.5k US dollars. So people who shorted made a lot of money. So these 1,907 people, they have actually made a lot of money. And there is the expectation that when the CME futures end, which is next week on January 26th, that something similar might happen. Again, this is not financial advice. You should talk to a professional before investing. But we believe that short-term volatility is not a reason to panic or to fear or to sell or to buy in any reason. We believe that you should do fundamental research first and invest into the fundamentals of a cryptocurrency. So yes, the market might tank again. Maybe it jumps right back up, and maybe it jumps even stronger. In any case, I would watch out for this date just to understand how the market dynamics work, because there will be more futures coming, there will be ETFs coming, there will be a lot of different financial instruments coming that might influence the market. If you are short and midterm thinking in terms of investing, this is important for you. If you are investing more with a long time horizon, like 3 to 5 years or maybe 5 to 10 years, then this is not as important for you, but still it's important or interesting to know what will happen. And with that, I would like to end today's episode. So hopefully we will stay in the green, and tomorrow and the coming days and weeks we will stay in the green and grow even faster. See you next time. Please like this video and subscribe. It really helps to spread the message. Bye.